Yes, guys, let's begin. Let's begin. Three more days. Minimum of partnership. Minimum. I feel it will require 4 days, but we start today. Yes. Yes, guys. Getting. Settle down. Fast. Online, guys. Now, we start with the partnership. Okay, partnership. Small chapter. One of the small chapters of CA Foundation is partnership. Small, very small chapter of CA Foundation. What? Huh? Chota chapter, yes. Yes. Now, first of all, you have to tell me what is partnership, guys. What is partnership? This you should know because you have had Partnership Act, which you have studied in law. The December people law is not over yet. Okay. Now, what is partnership? Two or more people coming together form a business with the purpose of earning profit. Clear? It is not we are just coming out of non-profit organization, right? So here it is not for service. It is for profit motive only. I'm going to change your places. Yes. Partnership. Understand, two or more people coming together for a purpose of earning profit only. That is the motive. Motive is profit. Clear? Now tell me one thing. We are in the basics or introduction of partnership. Once we finish the introduction part, then we will go into goodwill part and then we'll go into admission, retirement, death. Okay, all this. Only goodwill is also asked in the exams. Those questions are also there for 5 marks. They ask. Only introduction part is not there, but this introduction part will be required in all the other places where we are going to study partnership. Clear? Now, tell me, when there is a partnership between two or more people, okay, is it possible that there will be a fight?
Yes, sir.
Possible?
Yes, sir.
Correct? So first only they would want to have the terms clear. Correct? That is called as partnership agreement. What is partnership agreement? It's an agreement between the partners. Okay, all the terms and conditions of partnership is written over there. Maybe they will write, okay, profits should be shared in a particular ratio. Okay, loan can be borrowed only by one partner. Asset will be purchased by one partner. Day-to-day activities are looked after by one partner. So these things, interest on capital, interest on drawings, all these terms and conditions will be written. Now, what is partnership deed then? What is partnership deed? What is the difference? Partnership agreement, partnership deed. What is the difference? Agreement can be oral or written, yes, but you are telling me the differences. But how does an agreement, imagine I have written only everything, written agreement. How does this written agreement become partnership deed?
Register.
It should be registered. Registered with what? ICAI. Then Register of Firms. ROF. Clear? It should be registered. Then it becomes partnership deed. What is the difference, guys? This is also signed by all partners. That is also signed by all partners. Then what is the difference? Why can't we have partnership agreement only? Why should it be registered?
Not registered means can't be held accountable.
It can't be held accountable if it is registered. Now see, I and two of you, we have made one partnership. Okay, we have an agreement. All three have signed. We kept two witnesses also. They also signed. Clear? After that, there is a fight. Imagine when there is a fight, you go to court. Okay? And when you go to court, you are telling that, see, in this agreement, it was written that he should take only this much profit share. But he has taken more profit share. Court is looking at that. I am telling that I don't know only about it. I'm telling I don't know only about it. It is not my sign. These people have forged my signature. Possible? Possible. But if this same agreement, if it was gone, if it is taken to the register of firms, and if you have registered this, now, can I back out? No, right? Because there when we register, obviously they will call all the partners, and in the presence of the registrar, they will make you sign there again. Are you getting my point? So obviously it becomes easy legally to deal with the differences. So that is why partnership agreement, when it is registered, becomes partnership deed, and partnership deed has more credibility online. I mean, in law. Clear? If at all we are suffering any fight or some difference of opinion, that time partnership deed will help you resolve it. Is this clear? Now, for us, obviously, we are not preparing partnership deed also. We are not preparing partnership agreement also. Now, what we have to remember, the first topic of discussion for us, which is very important throughout partnership, is certain points are there. If not mentioned in the partnership deed. If not mentioned in the partnership deed, in case we don't have deed agreement, but if it is not mentioned or if it is not agreed, certain points are not possible. One, what is it? If at all nothing is mentioned in the partnership deed, then profit sharing ratio. Profit sharing ratio will be equal. Can you have a profit sharing ratio of 3:2:1?
No.
Can you have? Yes, but it should be mentioned in the deed. Clear? If you don't tell anything, that does not mean that profit will not be shared. Profit will be shared only. Profit or loss, it will be shared only, but it will be shared equally. Is this clear? Next, second point. No salary or remuneration. The other word is remuneration. No salary or remuneration to partners. Can we give salary to partners? Partners are also coming and working every day, no? Now you might tell, why are they getting salary? They are already getting profit share. Profit share, why they are getting? Because they have invested money into the business. For that they are getting profit share. So apart from investing money, if they come and work every day, day-to-day activities, if they take care of, they have to get salary also for spending time here. So no salary or remuneration to partners if it is not mentioned or if it is not agreed. So if it is agreed, allowed. If it is not agreed, not allowed. Clear? One more is no interest on capital. Owners have put money, no. Owners have put money. Can we tell, I have put so much money, I have to get interest on this money which I have put? Can you ask for that as a partner?
Yes.
Can you ask? Yes, you can. Others have to agree. Simple. If you agree, 50% interest on capital also you give, no issues. Nobody is going to stop. Your money only. No, partnership it is. It is not like company. Company, there are some restrictions. Why? Because company, public money is also involved. Somebody sitting with a demat account, that fellow will see the company shares and will invest money in that share. Clear? So there are some restrictions. Partnership not like that. People are putting money. They can share, but it should be agreed. Clear? Next. No interest on drawings. Interest, what is drawings by the way? Okay. We have seen drawings multiple times, but it was in sole proprietorship. Why closing? What is this?
Like partnership.
They also don't like partnership. Drawings. Now, one thing I want to discuss with you about drawings, which you can get confused when you reach admission, retirement and all. Now, tell me one thing. Imagine I have invested 1 lakh rupees as a partner in the partnership firm. Is it my capital? In the capital account, it will be shown as my capital account. Okay. Now, tomorrow I take 20,000. Is it drawings? I put 1 lakh. From that 1 lakh, I have taken 20,000. Is it drawings? Is it drawings? For whatever purpose, I took the money out of the partnership firm. It is not used for business. I took the money. I wanted to buy one cycle. I took the money. Is it drawings? Yes. No. This is capital withdrawn. This is capital withdrawn. Capital withdrawn and drawings are two different things. Here what has happened? I have invested money, my own money, I have taken it out. This is not drawings. Are you getting my point? Then what is drawings? This is also personal only. I told no, I took 20,000 to buy cycle. From profit. See, if you are a partner or if you are a sole proprietor. Now we'll discuss about partnership because we are in partnership. If you are a partner, okay, if you are a partner, understand this. You will get profit share, right? You will get profit share. When will you get profit share? When will you get profit share? Starting of the year, middle of the year, end of the year? End of the year, you will get profit share. Now you know as a partner, you are spending all your time over here, you will get profit at the end. Correct? Now this profit at the end, if you get, during the year you have expenses, no? During the year you have expenses, you know you will get profit. Imagine you are expecting that your profit share at the end of the year will be 3 lakh rupees. 3 lakh rupees will be your profit share at the end. So now during the year you have expense, no? Now what you will do? In anticipation of profit, you will take money from the business. In anticipation of profit, you will take money from the business. That is drawings, that is amount taken in anticipation of profits. All these you need. Later on they will tell you just make capital proportionate and all in admission retirement. You have to know what they are talking about that time. Okay, amount taken in anticipation of profit. Now you know that you will get profit share at the end of the year, but during the year you have your expense, day-to-day expenses are there. So what you will do every day, or sorry, not every day, every month or whatever time period, you will take money from the business in anticipation of profit. Now what will happen? Drawings gets reduced from capital, no? Drawings gets reduced from capital, but whenever profit is earned, profit gets added to capital. Can you see it will get set off there? Are you getting my point? It will get set off at the end of the year. But profit should be given to you when end of the year only. You are taking, actually it is like you are taking the profit early. Correct? That is why interest is charged on that. Because you are taking money early, you are going to charge interest. You have to pay interest to the partnership firm as a partner. For partnership firm, this is income. Is this clear? Are you following this? Yes, no. Because these as questions you might not get, but suddenly in one bigger question, this will be the doubt or confusion. Again, I am telling you, drawings and capital withdrawn, there is a difference. Capital withdrawn is amount taken out of amount invested. Now, if I take 20,000, the first example, 20,000, there is no interest that I have to pay. Are you getting my point? I gave 1 lakh rupees as capital. I took 20,000 from that. Am I liable to pay interest on drawings here? No, because my own money which was there in the firm, that I have taken out. Now in future, when I am getting interest on capital, I will get lesser amount. Are you getting this? In future, when I am getting interest on capital, I will get lesser amount, but I will not pay interest on drawings because it is not drawings only. My own money I have taken out. But something that belongs to business, that money if I take for my personal purpose, why I am taking? Because in anticipation of profit, expecting that profit will be there in future, I am taking the money now. This is drawings and on this I will have to pay interest because I am taking the money early. I am supposed to get money, yes, 100%, but I am supposed to get the money at the end of the year. I am taking money during the year, so I will have to pay interest on that. Are you following this? Is this clear? Yes. Now we'll get back over here. So what we have discussed, if not mentioned in the partnership deed, 4 points we have discussed. No interest on, profit sharing ratio will be equal. Salary not there. Interest on capital not there. Interest on drawings can we charge? No. Clear? Now, what is the 5th point?
6%.
Interest on loans maximum is 6%. Now, tell me one thing, guys. Nothing is there in my partnership deed about interest on loan. How much interest can be paid? 6%. I went to HDFC Bank. Okay, and I took loan for the partnership. I took loan. They are telling 10%. What to do now? They are telling 10%. Here it is written 6%. This is only for partners. So interest on loan from partners only. You cannot go to HDFC Bank and tell in my partnership deed nothing is there, so I will pay only 6%. They will tell that is the door, go out. Are you getting my point? That is it. They tell that door, take and you can go home. Okay. So this whatever we are discussing is interest on loan from partner. So if partner has given loan to partnership firm, can we pay interest to that partner? Yes. But how much? Maximum 6%. Maximum 6%. Can we pay 12%? Can we pay 12%? Yes. But it should be agreed in the partnership deed. Is that clear? Now what you have to understand, these 5 points which we have discussed, these are not prohibitions. Nothing is prohibited over here. Here only what is told is if at all it's not there in the partnership agreement or partnership deed, then you are not going to get, then you have to follow these rules. Because these are the rules as per the Partnership Act. Are you getting my point? So the Partnership Act has told if you don't agree, then I will tell you what to do. Is this clear? Now, there is one sub point here. It is not part of these 5, but there is one sub point. That is interest on capital to be paid in case of profits only. Interest on capital to be paid in case of profits only unless agreed otherwise. What does it mean? Unless agreed otherwise means what? If at all we have agreed, whether we have profit or loss, we will pay interest on capital, no problem. We have agreed, no, as partners. But if it is not agreed, we have just agreed that interest on capital is 8%, interest on capital. Then we can pay interest on capital. These 5 points will not be applicable. Clear, interest on capital we can pay. But if it is not agreed, then it will be paid only if there is profit. Only if there is profit. Are you following this? Did you get this? Did you understand? If nothing is mentioned in the partnership deed, nothing we have written in the partnership deed, we have only told that profit sharing ratio is 2:1. That means can we pay interest on capital? No, we cannot pay interest on capital. Now we understood about this and we put one point in the partnership deed telling that interest on capital to be paid at the rate of 8%. Can we pay interest on capital? Yes. Can we pay interest on capital when there is loss? No. Now if I put in the partnership deed, interest on capital to be paid at the rate of 8% in case of profit or loss. Now can I pay interest on capital even if I have loss? Yes. Is this clear? So what they said, interest on capital to be paid in case of profits only unless mentioned otherwise. If at all they have told something else, then you can give. Now, taking one example. Okay, taking one example. Yeah. Now, see over here. Imagine the profits are 80,000 and we have partners X, Y and Z, 3 partners, and the 3 partners, their capital is 1 lakh. Let's make it 10 lakhs. From the class, sir. That will simply create distraction only, no? Okay, future examples we will take. Future examples we will take. Now, not 80,000, 8 lakhs. Let's make it 8 lakhs. Clear? Now 10 lakhs capital, 5 lakhs capital, 2 lakhs capital. If I tell you interest on capital 10%. Interest on capital 10%. So how much I have to give? For the person who is having 10 lakhs capital, how much interest on capital I should give? 1 lakh. For the person who is having 5 lakhs, how much I should give? 50,000. For the person who is having 2 lakhs, how much I should give? 20,000. Do I have profit to give all this? Do I have profit to give all this? Yes, my profit is 8 lakhs. My profit is 8 lakhs. So what I will do in this case, interest on capital will be given. Interest on capital to X, Y and Z. We will give 1,50,000 and 20,000. It should be agreed, it should be agreed. Okay, balance profit. What will you do with the balance profit? Share in profit sharing ratio. Equally, if nothing is mentioned, otherwise there is profit sharing ratio. Is this clear? Now, I'll give you time to write. Wait. I'll give you time to write. Now, see the next example. Profit is 1 lakh. Profit is 1 lakh. We are partners. Next time. XYZ, we have partners and their capital is 5 lakhs, 5 lakhs and 5 lakhs. Let's change it. 5 lakhs, 10 lakhs and 5 lakhs. 5 lakh, 10 lakh and 5 lakhs. And let's say interest on capital is 10%. Interest on capital is 10%. Now tell me one thing. Do you have money to give the interest? Interest on capital. Do you have money to give interest? Do you have money to give interest? We have only 1 lakh over there. So what was told? Interest to be given in case of profit only unless agreed otherwise. Let's say we have agreed that we will give interest. Okay, and if there is loss, we will not give interest. Now here what is happening? We have profit. We have profit 1 lakh. See, understand the points in the act. In the act, what did they tell? They told that you will give interest on capital if there is profit only. Otherwise, if it is loss, you should have agreed that we will give interest. Then only you give in case of loss. Now here it is not loss. It is profit only. But the problem is the profit is not sufficient. The problem is the profit is not sufficient. Now what will you do? When there is insufficient profit, what we will do is available profit. See, I don't have profit to give you interest on capital for what you are supposed to get, but I have some profit. No, available profit. What we will do? We will distribute. And in this case, the profit sharing ratio is 3:2:1. In this question, profit sharing ratio is 3:2:1. So, available profit will be distributed in what ratio? No, 3:2:1. In capital ratio. 1:2:1. Is it clear? Why like that? Otherwise, it becomes unfair. No, it becomes unfair. What are we supposed to do? Interest on capital has to be given. Interest on capital, how much capital is there in that ratio only you are supposed to give interest? We don't have sufficient profit. So what we are doing, we will distribute that in capital ratio. This rule also you have to remember. Clear? So now in this case, interest on capital will be 1 lakh distributed to X, Y and Z. In what ratio? The capital ratio 1:2:1. So 25,000, 50,000 and 25,000. Is this clear? Are you following this? Now, will we do this in case of once again? Okay, now the capitals are 5 lakh, 10 lakh and 5 lakhs. The capitals are 5 lakh, 10 lakh and 5 lakh. Interest on capital is how much? 10%. If you take the interest rate and you check, you need 50,000, 1 lakh and 50,000. Total becomes 2 lakh you need now to give interest. I need 2 lakh rupees because my total capital is 20 lakhs. On 20 lakhs, 10% if I take, I have to give 2 lakh rupees interest. No, but I don't have 2 lakh. I have only 1 lakh. When this is a situation when you have profit, but you have insufficient profit or inadequate profit. When there is inadequate profit, what you will do? That profit which is there, at least that you give to partners, but that will be given in capital ratio. Insufficient means you give it in capital ratio. In this case, if at all we had 2,20,000 profit, then what we will do? We will not distribute all the profit in capital ratio. What we will do? 2 lakh we will give interest on capital. 20,000 we will distribute in profit sharing ratio. Is it clear? Are you following this? Yes. I think you can write. These things you have to have it in your notes. X and Z 25,000 by 50,000. Yes, that's correct. Right, guys. All this you have to write. Maybe that from here you can start. If not mentioned in the partnership deed. Can't see her. Above that there is nothing. It's only written partnership agreement, partnership deed. I think the CV will go there. See, there is a stand, no? And actually, you can sit there also that time and see. But it will be hot there, I guess. There it will be hot. AC air won't reach. Guys, 16. There, see, right there, the remote is.
16 only.
No, it is 24. Yeah, it is hot only. No. 2 fixed, it is fixed. We are maintaining consistency. Fixed. No, we should not break. See, CSK, one day when they break the consistency like yesterday, you're feeling bad, no? That you have to have the consistency. Then only we'll reach the playoffs. CSK, so 100% they'll reach playoff. But anticipation of profit. Because profit will get credited to capital account. Drawings will get debited to capital account. Will get. Now there is a new Twitter trend which is going on. They are telling that Dhoni should be taken as the keeper for the T20 World Cup. Why? If he agrees, it is possible. See, he is batting only 2 overs. There also he can bat 2 overs, last 2 overs. Keeping, if he does is enough. And if he keeps, bowlers also will bowl properly. He will tell the bowler everything. Yesterday also he came 1 ball 4. Yes. Even some wide and all he was referring yesterday, and the wide was overturned. I think this season he has not gotten out only. He'll play 1 or 2 overs, but He hit some 2 6s. In case we have sufficient profit, we will give profit sharing ratio. No, we will give the interest. In case we have sufficient profit, we will not give in profit sharing ratio. We will give the interest. On the capital, we will calculate interest and give. Remaining profit, we will distribute in profit sharing ratio. Not to begin. Same with interest on drawings. You can't ask them to pay interest on drawings if we have not agreed about it before. Can I scroll down? What did you miss? You finished writing. For theory subjects, you have to create stories. For theory subjects, to remember, you can create stories. This person and there, and all start. You need, otherwise it's not possible to remember that law. And especially at, yeah. Otherwise, at foundation level, that law is too much. So only if you have examples and some funny, then you will remember all. His name was taken all. What did he do? He broke some contract and all. Every illegal thing he only. Oh, minor also he only. Change the angle. Change the angle, guys. Put it in such an angle that it will not hit anyone directly. Press the swing once and stop it when it goes exactly on top. Done. Can we go further? So again, what do we do if we have extra profit? We don't distribute all that. If you have extra profit, what will we do? Distribute in. Still it is hitting you. Guys, change that angle. Go. Stand up. 1%. Yes. You just stand. Raise your hand. Push it upwards. Push it upwards. Push it more upwards. Done. Leave. That is changing angle. Is it hitting you now? Why? It's okay. This is also a solution, right? If you are feeling extremely cold, no, it seems you can sit here. Here it is not cold. And now it will not hit her. See, now if you change the swing, no, it will again create the issue. It will spread in the room. Or you keep it downwards so that only this side people are getting it. Yes, let's go further. P&L appropriation account. P&L appropriation account. What is this? When is it prepared? Till now we learnt about trading account, P&L account, balance sheet. Now when is this P&L appropriation account going to be prepared? Before trading account or after trading account? After trading account. After P&L or before P&L? After P&L. After P&L. See, P&L appropriation is an account which is prepared to distribute the profit what is there in different names, but it is distributed to partner. It is distributed to partners. Is this clear? Now, can we do this before paying the outsiders? Rent, electricity, all that is pending. Salary to employees and all pending. Can I distribute the profit? No. So first P&L has to be prepared as usual. There is no change in P&L. P&L has to be prepared. Whatever profit is earned in that P&L, after paying everyone, what is remaining, that profit will be transferred to P&L appropriation account. So here by net profit brought down or brought forward from where? From P&L account. Does this happen in sole proprietorship also? No. If it would happen, we would have seen it. No, we finished the chapter and came here. Okay, it does not happen in sole proprietorship. It happens only in partnership. So profit, what happens? It will be transferred to P&L appropriation account. Now this profit in this P&L appropriation account, now whatever is going to be there, it's only transaction between partners. Transactions of partners only. What is to be given to partner, what is to be taken from partner. That's it. No outsider is going to come into P&L appropriation account. Clear? Now, in P&L appropriation account, if we are giving the profit, okay, if we are giving profit, it will be returned to partners capital account or partners current account. Partners capital account or partners current account. If profit is going to be given, it has to be debited here so that there it will be credited. Clear? What and all can be given to partner? You can give salary to partners. I have an employee. That employee's salary can I put here?
No.
That employee's salary will be in P&L only. Clear? Only salary to the partners will be there here. Then interest on capital, that also will be debited here and will be transferred to partners capital account or partners current account. Next, is there anything else? Commission, if we are paying, actually it covers in salary only. We'll add that commission to partners. Then finally what we give? Whatever remains, profit share. All these items will be given to partners. Now, are we going to take something from partner? Yes, what is that? Interest on drawings. So, you are going to write by partners, capital or current account, and under that you are going to write interest on drawings. Is this clear? P&L appropriation account also can be asked in the exam. But obviously they can ask something that is little with errors, corrected, all that. Rectification of errors. P&L adjustment account is when we have made a mistake already, we are bringing the profit back, rectifying that mistake, then we are distributing it. That is P&L adjustment. This is normal process. From P&L, the profit came here. Now the profit is going to be distributed. It is already distributed. Some mistake happened when we are distributing. Bring the profit back to P&L adjustment account. The profit from balance sheet that what is distributed to partner will come back to adjustment. We'll rectify that mistake. Then we will distribute back to partners. P&L appropriation or P&L adjustment. One separate ledger is going to be opened called P&L adjustment. So if I have P&L appropriation and if I have P&L adjustment both, person reading will get to know, no, normally the profit was distributed like this. Because of the error, the profit came back to adjustment. Then the adjusted profit is sent back to partners. Yeah, one question is there. In rectification of errors, remember one question we had kept pending for finishing partnership and coming and discussing. We'll do that. Exam question it is. Is this clear, guys? Now, what about drawings? What about drawings? What about drawings? We put interest on drawings here, but drawings is not there. Drawings will not be entered in P&L appropriation account. Why? What is the entry for drawings? Drawings account debited to cash or drawings account debited to purchase. Clear? Then this drawing should be reduced from capital, no. So the next entry will be partners capital account debited to drawings. There is no involvement of appropriation here. Are you following this? Okay. This is your P&L appropriation. We have problems to solve in P&L appropriation. It's there. In previous part, you told extra profit that we do. Tell again. Okay, the previous part, guys. If at all interest on capital, we don't have sufficient profit, we distribute in capital ratio. If we have sufficient profit, then what happens? We will give the interest, remaining profit we will distribute in profit sharing ratio. No capital ratio there. We will give the interest, remaining profit in profit sharing ratio. Is this clear? That same thing you can do in remote also actually. You don't have to give him work every time. You can do the same thing in remote. Now is it hitting you? You can keep it in swing so that it is shared. The pain is shared. You go out, you'll realize that this pain is better than that pain. Yes, can we go further? Let's proceed. Now here, I wrote two partners capital account or partners current account. When do I know which one to use? When do I know which one to use? Whether putting into capital account or current account? We have, next discussion is capital maintenance method. In capital maintenance method, what happens? We have two types of capitals, that is fixed capital method. Fixed capital method, and we have fluctuating capital method. Fixed capital method and fluctuating capital method. Fixed capital method means what? Capital is fixed. Capital is fixed. Only two things will be entered into capital. What is that? Capital introduced and capital withdrawn. Only capital introduced and capital withdrawn will go into capital account. See, now you need to know the difference between capital withdrawn and drawings. Otherwise, you'll put drawings also into capital account only. Are you getting this? So, if at all you have fixed capital method, that means capital should remain fixed. Once I introduce the capital, other things should not affect the capital account. So, what will affect the capital account? I put money, capital account will change. I removed money, capital account will change. Clear? In this case, what we will do? We will use one current account. We'll use one current account. Partners current account is going to be prepared. What happens in partners current account? All other transactions, that is interest on capital, salary to partner, profit share to partner, interest on drawings taken from partner, all these transactions will go into partners current account. Is this clear? So all other transactions will be in partners current account. I hope it's clear. There is a doubt here. Reserves also come in P&L appropriation. Reserves means what? I don't distribute to anyone. I just keep it aside. That also P&L appropriation only. Everything which belongs to partners in P&L appropriation only. All other transactions will be in partners current account in this case. Why? Because they said capital should be fixed. What are the other transactions we can think of? Interest on capital, salary to partner, commission to partner, profit share of partners, interest on drawings. If at all there is interest on loan, that also, everything will be in partner's current account. It will not affect your capital account. What happens in fluctuating capital method? In fluctuating capital, all transactions related to partners will be in partners capital account. There is no current account here. Is this clear? Are you following this? So if at all some question is there when we go into admission or retirement or any of those advanced problems, if at all in the given balance sheet you see partners capital account and you see partners current account, that means naturally you should understand that they are following fixed capital system. Is this clear? Now, one more from the basics, couple of concepts more are there. One is interest on drawings. Interest on capital we just discussed. Yeah, those are the two topics. Interest on drawings and minimum guaranteed profit. Two things we have to discuss. Can I go further, guys? For that we have still time. We have to forgot the names. Now, interest on drawings. What is better? Partnership or company? Not for examination point of view. If you are starting a business, partnership or company? Depends upon what? Which perspective? Nature of? Okay, you are starting a chocolate manufacturing business. Why? I am starting sandwich manufacturing business. Partnership. Company only. Whatever may be the business, company only. Why? Company has separate legal entity and limited liability. Your liability is limited only to the unpaid amount on the share. Huh? Perpetual existence. That is for company, for you no benefit. People may come, people may go. Company will remember, but you will go no. Okay, for you no benefit in that. Okay, main benefit is if at all partnership goes into loss. Okay, and when we are recovering, even partners' personal assets can also be taken and it can be sold. But that is not there in company. But company also you have other concepts. If you are doing fraud and all, using then their lifting of corporate veil and all is there. All that is there. So there also you cannot use that as a shield. Okay. Interest on drawings. Merger of both, mix of both. Now interest on yeah. You don't worry about it. Okay, interest on drawings. Now, listen guys, when we are talking about interest on drawings, okay, there are some scenarios, different scenarios are there that can appear in the exam. Now, it might not appear as interest on drawings, it can appear in a normal admission question, there might be one situation there. Now, situation number 1. Drawings on different dates. Drawings on different dates. Now, with examples, we'll take everything. Now, if I have one partner is there. Tell me what is your name? See, drawings, no. They told that all bad things we have to take your name only. If it is interest on capital, we'll take someone else. Yes. What? We don't want to know the other half. We are only asking one half. Okay. His better half we are not asking now. We'll ask later. Okay. Partner is Purna. Now drawings. Listen guys, listen. Interest on drawings If you don't agree, then we cannot charge from Purna. Correct? If at all Purna and the other partners have not agreed, then we cannot ask him to pay interest on drawings. They have agreed that interest on drawings will be 10%. Interest on drawings will be 10%. Tell me one thing, if at all on 1/4/2020 he has taken drawings of 10,000, why and all we will not ask him. Okay. 1/10/2020 he has taken drawings of 20,000. 20,000 expenses are increasing because of better off. 1/1/2021 5,000 drawings less, broke up. Now only sitting heartbreak expenses 5,000. For heartbreak, what he is doing, we don't want to discuss that. Okay. Now these are the things. See, it is like there is one saying, hitting the hammer to our own leg. Okay, he did that. Quietly, I was taking example as XYZ. He told, sir, we have to take some interesting names. Yes. So these are the drawings on these dates. Now what is our job? To calculate interest on drawings. To calculate interest on drawings. When we have to calculate interest on drawings, is there a pattern here? Is there a pattern? No. It is on different rates, different amounts. So you will calculate individually. So 10,000 is drawn, right? 10,000 is drawn on what date? 1/4. Imagine we are following financial year only. First day of the year, 10,000 is drawn. So 10,000 into 10%. All 12 months, right? So 12/12, basically it is 1,000. Is this clear? Next, how much did he withdraw? 20,000 drawings, 10%. But when was the drawings? 110. So you will take only 6/12. This also will become 1,000. Is it the sleeping effect? Book and all is falling. Sometimes pen and all like this when you're writing. It will fall if you're sleeping. 10% into 1/1/2021. So how many months in this year? 3 months. 125. So the total interest on drawings is 2125. Is this clear? Is that clear? This is one type of situation which can arise in the exam. They tell you these dates, these are the drawings, these are the partners. So we took only for one partner, other partners also will have drawings, same way we'll calculate. Clear? Now we'll finish all the scenarios, then I'll give you time to write. Next. Drawings on 1st of every month, same amount. Now, consistent. Is the relationship is going consistent. Okay, there is no ups and downs. Like previously, there was an ups and downs were there. Here, nothing. Stable relationship. Okay, every month 10,000. Every month 10,000 per month, and he's taking on 1st of every month. 1st of every month. So now what happens? We can calculate like the previous method. What we will do? Every month we will take 10,000, 12/12, next 11/12, 10/12, 9/12, so on. 12 times you have to calculate. So in this case, what we will do? Okay, in this case, we will take total drawings into interest rate into 6.5 divided by 12. It's a formula which we can use to avoid doing the same repetitive work. So here what happens? What is this total drawings? 10,000 into 12 into 10% into 6.5 divided by 12 is equal to
6,500.
6,500 is the interest. Are you following this? Every month 10,000 per month. That's the formula. That's the formula. That's a shortcut. Explain the logic behind what? Basically, it is first month, it is 12 by 12. 1. Then it is 11 by 12. If you take all that average, no, you'll get 6.5 by 12. If you take the average of all that. For us, it is simple. Instead of doing repetitive work, we will just take, what do you say? 78 divided by 12 is 6.5. Because first month 12, 12 plus 11 plus 10 plus 9 plus 8 plus go on like that. Okay, you will get some number that you divide by 12. That time you will get 6.5 divided by 12. You will be actually doing that, no? See, understand this. You can use this formula only if every month starting you're taking the drawing and every month starting you're taking the same amount. Are you getting my point? Imagine if you're calculating what you would do. You will take 10,000 into 10% into 12 by 12. 10,000 into 10% into 11 by 12. Can you see? This 10,000 into 10% is constant. What is changing? Only the multiplier, the last multiplier is changing. So instead of doing that so many times repetitive, if you take the total and average it, you will get 6.5 divided by 12. Is this clear? Are you following this? Now, if at all, first 3 months he has taken 10,000, next month he has taken 11,000. Will it work this formula that time? No, you can't. That time you have to calculate individually only. Is it clear? Now, third scenario. Drawings every month, middle, obviously same amount. Obviously same amount. Now what will happen? It will be total drawings. Total drawings into rate into 6 by 12. 6 by 12. Basically, you would have done, first month you would have done 10,000 into 10% into 11.5 divided by 12. Then you would have done 10.5 divided by 12. Then so on and so forth. When you go to the last month, you would have taken 0.5 divided by 12. So instead of doing all that repetitive work, it is 6 by 12. Is this clear? Are you following this? Derivation did you get? You have to just memorize the formula. Did you get the derivation? Okay, in case you forget the formula, you still have the backup route. What is the backup route? Calculate individually quickly. Is that clear? So now here what happens? 10,000 into 12 months into 10% into 6 by 12 is equal to 6,000. 6,000. Fourth, what else can happen? Drawings every month. Every month, okay, end, and obviously it is same amount. So now the formula will be total drawings into rate into 5.5 divided by 12. 5.5 divided by 12. Again, if it is the end of the month, first month would not be there. No interest in first month. Okay, because first month you have not taken anything. So first month when you are calculating, it will be not 12 by 12, not 11.5, it will be 11 by 12. Only 11 months interest will be charged. And last month when you are calculating, no interest. On last month, no interest because you are taking at the end of the month. No, so it would be 0 by 12. So when you are calculating, you will get the average of 5.5 divided by 12. So it will be 10,000 into 12 into 10% into 5.5 divided by 12. That gives you 5,500. Is this clear? Is this clear? Again, I am stressing on the fact date has to be same, amount has to be same. Otherwise, like you can't use this formula. You have to use alternative one. Just calculate date wise. Is this clear? Now, what about fifth scenario? Total drawings given in question. Now in this case, Purna, what he has done, people are seeing the pattern and then they are following him and seeing where he is going. Okay. So to avoid that pattern, what Purna has done, he has not told anything anywhere and he has just told Total drawings during the year 1 lakh. Which date? When? Nothing. Total drawings given drawn during the year full. Incognito mode he has gone into. Okay. End of the year he has given derived the amount and given. What he has done in incognito mode, we are not asking that. Don't smile. Okay. Bring back your thinking here only to class. Yes. Total drawings 1 lakh. See what? They don't have bharosa on you only. Just I told something. They are looking at you like this. Yes. Now tell me. Total drawings 1 lakh. What will you do? If at all in the question they give like this. They don't tell you the date. They don't tell you a pattern. Nothing. They just tell you total drawings is 1 lakh. In this case, it is assumed that drawings are done evenly. In this case, it's an assumption that you're going to take. Why? I cannot take 1 lakh into 10%. If I take 1 lakh into 10%, completely wrong. Why? If I take 1 lakh into 10%, I'm assuming that this person has taken the 1 lakh rupees at the first day of the year. Are you getting my point? So that's why I cannot charge full year's interest on this 1 lakh, because 1 lakh is not 1 day's drawings, it is total drawings of the year. So in this case, you have to assume that drawings are evenly made during the year. Drawings are evenly made during the year. So what will happen now? 1 lakh into 10% into 6 by 12. 1 lakh into 10% into 6 by 12. I think it should be 5,000. Is this clear? Are you following this? Clear? These are the scenarios that can arise in the exam. First, what? They give you 2-3 dates and tell you these are the drawings. Second, drawn on first of the month, then it will be 6.5 by 12. Drawn middle of the month, 6 by 12. Drawn end of the month, 5.5 divided by 12. Last, they don't tell you any date, nothing. Total drawings during the year is this. So if you are charging interest, 6 by 12. Is this clear? Yes, you can take all these scenarios down. Yes, Purna, what did you do with the drawings? Full decent boy. Invested in shares, he is telling. Behind the class, we don't know where he has invested it. At least in front, he is telling that he has invested in shares. Yes, it is similar to average period method. Right. We should not talk all these 16-year-olds are there. Minors. We don't want to spoil them. Evenly made means 15th of the month. 15th of the month. Evenly made can also be middle of the year 50,000, end of the year 50,000. Middle of the year 50,000, end of the year 50,000. That time also the interest will be 5,000. Not this one, down. Understood? No? So if it was inter, no, I can give many examples, because inter we have so many standards, so their little theoretical parts are there. A foundation, it's all solving only, no, that's why hardly any examples. Inter we have some crazy examples. 29 standards are there, yeah. So LSG has beaten CSK 2 times now, no? Both the times. Oh, SRH is unpredictable, it is. They don't know any other style. No, they explained that also. They said we will play the same way. In case someday it does not work for us, still our total will be 170, 180. Because everyone is coming and hitting. No, if they don't get 230, they'll still be 171.8. Usually SRH was not like that. SRH was a team, they used to make small total and they used to have good bowlers and they used to defend it. This time, Travis Head, they should ban him from power play. That day 120 they scored in power play. Yeah. I felt that day they could score 300 actually. Yeah, that because 6 over 120 they made. And it is not only Travis Head, Abhishek Sharma also is playing like that only. But people are still in 4 here. Yes, guys, can we go further? We can take a 5-minute break. Yeah. We'll continue. Get back, fast. Getting, done. 7 minutes. I told 5. Come in. Good, fast. Are there more there? Can you see anyone? No. Oh, they'll come. It's okay now. You don't go to call them. Then you will also go missing. Yes, last part of this chapter. I mean this unit, not chapter. Okay, this unit, last part, which we have to discuss. Then we'll start solving problems based on this unit. Okay, this is a concept called as minimum guaranteed profit. Minimum guaranteed profit. Yes. Now tell me guys, what is this minimum guaranteed profit? What is this minimum guaranteed profit? Firm promises the partner. Now see, imagine you are starting one firm over here. Okay. Let's say you are planning to manufacture chocolates. Hungry? No, you're hungry. So I should target that only. Okay. You're planning to manufacture chocolates. So you don't know exactly the complete system of manufacturing chocolates. So you got somebody who was working for, let's say, Nestle. Okay. You got somebody who is working for Nestle and you told, can you join my new firm? We are going to manufacture chocolates. So obviously, will that person be ready to bear the loss? No. Will that person agree with small amount of profit? No. That person might tell that minimum I need to get this amount of profit every year. Are you getting this? This is minimum guaranteed profit. Now in minimum guaranteed profit, we have couple of scenarios over here. First one, guarantee given by firm. Guarantee given by firm means what? The firm itself is giving guarantee that first the profit will be given to you, minimum guaranteed profit will be given to you. Getting, you're already late. Guarantee given by firm. Now let's assume a scenario over here. We will not take your name this time. Okay, X, Y and Z. 3 partners are there. A, B, not good, huh? P, Q, R. Not fine. Prince. Okay, King and Jack. Okay, clean cuts. King, Queen and Jack are 3 partners. Clear? Now when we have 3 partners over here, okay, 3 partners over here, King is given guaranteed profit. Guaranteed profit. Okay, guaranteed profit of rupees 2 lakhs. Guaranteed profit of rupees 2 lakhs. And the profit sharing ratio is 5:3:2. Profit sharing ratio is 5:3:2. That means what? Whatever happens, King should get a minimum guaranteed profit of 2 lakhs. Okay. Now we are still in that situation where guarantee is given by firm. Now what if the profit is 3 lakh rupees? Profit for the year is 3 lakh rupees. What will we do now? There is a minimum guaranteed profit, right? So what will happen to 2 lakhs? And guarantee is given by whom? Firm, right? So King will get 2 lakhs. Why King will get 2 lakhs? Because if you share this profit, King is supposed to get only 1,50,000. If 3 lakh is distributed in the ratio of 5:3:2, King will get only 1,50,000. Is that clear? Now, what will happen to Queen and what will happen to Jack? After giving that profit, there is a balance profit, no? The balance profit is 1 lakh. This will be distributed to Queen and Jack in what ratio? Their profit sharing ratio, that is 3:2, 60,000 and 40,000. Anyway, I'm not giving that 5 minutes break, okay? People are not coming back in 5 minutes. So we are going all the way straight. After the 10 minutes break, we are going till 2 without break. If it's a 5 minutes break, you need to come back in 5 minutes. Huh? What? Okay, that's better. Yes, 3:2, 60,000 and 40,000. Are you getting this? So whenever guarantee is given by firm, what happens? If at all the profit is not sufficient, if the profit is not sufficient, then what we will do? We will distribute the profit first to the person whom we have guaranteed, and then the remaining profit will be shared by the other partners in their profit sharing ratio. Clear? What if in the same situation, if the profit was 5 lakhs, if the profit was 5 lakhs, now what happens? Profit 5 lakhs. If I distribute this, how much it will become? 250, no, per A. So do I have to worry about minimum guaranteed profit and all? No, because I'm already over the minimum. So now in this case, nothing to worry about. Just distribute to King, Queen and Jack, and it will be distributed in what ratio? 5:3:2. So 2,50,000, 1,50,000 and 1 lakh. Did you get my point? Clear? So if at all we have a shortage, if we have shortage of profit where we can't distribute the minimum guaranteed profit to that person, then 2,50,000, 2 lakh will be given to King and the remaining profit will be distributed between the remaining partners in profit sharing ratio. Is this clear? Now, if you have more, don't worry about minimum guaranteed and all, just distribute the profit in profit sharing ratio. What scenario are we in? When the guarantee is given by firm. Now what if guarantee is given by partner? Guarantee is given by one partner. Okay, if guarantee is given by other partners, that is different scenario, we will see that. Okay, now if guarantee is given by partner, and in this case Queen has guaranteed King, profit of 2 lakhs. Queen has guaranteed King, profit of 2 lakhs. What was the profit that time we got? 3 lakhs. 3 lakhs, right? So what if the profit is 3 lakhs? same numbers. We'll see how it varies. What if the profit is 3 lakhs? Okay, in this case, understand this. If profit is 3 lakhs, if I distribute it, profit is not, guarantee is not given by firm, no? So, guarantee is not given by firm. If guarantee is given by the firm, what firm will do? First distribute that profit to that person, remaining we will distribute to others. Okay, guarantee given by firm is basically like when at home, when your mother is preparing something nice and guests are coming home. First you will give the guests, then remaining you will be counting. Oh, just one more he ate. Oh, one more he ate. You know, how much ever they eat, your count which remains for you is going to reduce. That is like guarantee given by firm. First you give to the partner who is guaranteed and remaining is shared between other partners. Here what happens? Profit, guarantee given by one partner. So what will we do now? First we will distribute. Distribute in what ratio? 5:3:2. Can you distribute in 5:3:2? You get 1,50,000, 90,000 and 60,000. Okay, basically it is king, queen and jack. Clear? Now, is there a problem? Did king get the guaranteed profit? No. So what we will do now? Queen will give whatever is supposed to be given. So plus, we are going to add 50,000 to make this 2 lakhs and minus 50,000 to bring this down, it will become 40,000. Can you see that jack is not affected? Because of you all, the 5 minutes break is cancelled from tomorrow. Just others are telling thank you to you. Yes. 1,50,000 plus 50,000, 2 lakhs. How did it become 2 lakhs? How did it become 2 lakhs? Queen has given the guarantee to this person. Is this clear? Now, see, understand this. Okay, understand this. If at all guarantee is given by one partner, the third partner who is there, that person shouldn't be affected, no. That is why jack in this case will get the profit share as per the distribution. Who will suffer? The person who has given the guarantee. But if guarantee is given by the firm itself, then who will suffer? The remaining partners. Are you getting this? Okay, if there is excess profit, I am not taking that distribution again. If it is excess profit, nothing to calculate, just distribute. If we have profit of 5 lakhs here, do we have to see guarantee and all that? Just distribute, it is going above the guaranteed amount only, so no problem. Are you getting this? Okay, now, do we have a third scenario? Guarantee given by other partners. Guarantee given by other partners. Now what if in this case, queen and jack have given the guarantee equally. Actually their profit sharing ratio is not equal, but they said if at all there is shortage for king, we will give it equally. Are you getting this point? The second scenario is like that same guest example. If you want to take second scenario, your mother has promised, don't worry guest, how much ever he eats, I will give you this much. So if at all guest eats more, no, then mother will remove one from her share and give it to you. Happens, no, at home. Okay. Now guarantee given by other partners, that means mother and father both have to sacrifice now. Okay. Now equally, imagine the same situation where the profit is still 3 lakhs. Is the guarantee given by the firm?
No.
No. So what we will do? We will distribute it. If the guarantee is not given by firm, we will just distribute it in the ratio of 5:3:2. That time you are getting 1,50,000, 90,000 and 60,000. Are you getting this? So now, what next? How much is shortage? 50,000. So 25,000 will be given by queen. So this becomes 65,000 and 25,000 will be added over here and 25,000 will be given by jack. So this becomes 35,000 and 25,000 will be again added over here. So now this total becomes 2 lakhs. Is this clear? Are you following this? Clear? 3 scenarios, minimum guaranteed profit. So what you have to remember, if the guarantee is given by firm, don't distribute. If at all we have extra profit, when we distribute, if at all it is going more than the minimum, then what you will do, just distribute it. But if at all there is shortage, first you give that guaranteed amount to that person, remaining profit you distribute to others. If guarantee is given by one partner, then distribute the profit, shortage will be removed from that partner and given to this partner. Clear? If at all guarantee is given by other partners in a different agreed ratio, not their profit sharing ratio, different agreed ratio. So in that case what happens, again distribute the profit. If there is shortage, that shortage will be given by other partners. Is this clear? This is the last concept of the introduction part of partnership. You can write it quickly. Loss, nothing. We can't do anything. If there is loss, we can't do anything. Yes, there are some cases, but at least in our syllabus it's not there. But in some cases, what happens, even if there is loss, that person has to get fixed amount. So partnership firm has to borrow loan, give that person, that loan will be repaid by these two other partners.
That is a promise by the firm. If it is promised by the partners,
there will be a loan which that partner will bear the loss. That loan will be adjusted with his capital account. Right, guys, fast. Can we go to the next one? What if 2 persons get guaranteed profit? Then the third person will bear the loss. Okay, third person will be given. If at all it is guaranteed by firm, first you give those 2 people, remaining will be given to third person. If it is guaranteed by that partner, distribute the profit, shortage will be borne by that partner. Guarantee given by partner to a firm. That cannot happen. How can partner give guarantee to firm, guys? Partner will give guarantee to the other partner that if at all there is a shortage, I will give you from my share. That is guarantee. If in question it is mentioned that Queen and Jack will share the deficit of profit guaranteed in 1:2, then should we use this ratio? Yes, if it is told 1:2, we will use that ratio. Guarantee given by partner to firm is same thing. What we are discussing over here. Don't worry. Can I go further down? I think the problem of your head coming in between will be resolved soon. They are planning to put it there. See that mounted. So your head won't come in between. Huh? No, the TV. That classroom, because sir was using mic, no, it was loud. That's why it was getting affected. 29th, Karthik sir. 29th, yeah. We'll finish law.
so the profit is 3 lakh, but the guaranteed was keep for 4 lakh.
Then we'll give 3 lakhs, that's it. I told no, if at all we have shortage, we'll have to take loan only and give. There is no other option.
The pay 4 lakhs. The other partners will pay.
Having a deficit. Basically, it's going from other partner's capital account to this person. If at all we are giving extra more than profit, that means it's basically as if other partner's capital is reducing and that money is going into him.
Guaranteed by the firm.
Still, that loss has to be borne by firm, no? It will become 1 lakh loss now. Loss will be distributed to other partners only. No? When it was 2 lakh, remaining profit was distributed to other partners. If you give 4 lakh, loss will be distributed to the other partners. Yes, can we go further? We will do it. Problems only we will do. Because there is no method. Again, dates. One product method is there. We will learn as we go. Can firm guarantee profit for all partners? that would be a little difficult, because if there is shortage, then who will bear the loss? Firm cannot guarantee profit to all partners, because firm is basically partners only. There is no separate entity called firm. It's partners only. So it cannot guarantee profit to all partners. It will be difficult, because who will bear the loss then? That will be a little tricky situation. Can we go further? None, no? We are in introduction of partnership. These concepts are important, because in admission suddenly it will come and trouble us. So we will not know what to do. There will be an admission question where they will not tell anything. They will just tell capital so much, current account so much. So now you should know fixed capital and fluctuating capital over there. Or in admission they will just tell drawings of partner C is so much. So now you know, you need to know, you have to take that assumption 6 by 12. Done now? Okay, we'll go into problems. And when we need, we'll come back into the theory and we will discuss. Here we are, finally, in our journey of solving problems. We are going to solve few problems. Okay, few. See, introduction, we have around 9 questions. Okay, goodwill, we have some 10 questions. That some are all scenarios there. 10 questions, 11 questions, and there only I have put some goodwill what has come in the exam, 5 marks, 2 questions are there. Then admission, we have few questions on admission, 9, 10, and admission related, you can see, actually this is not admission related, see guarantee given by firm, guarantee, minimum guaranteed profit, the question has come in the exam, 5 marks. Okay, then one admission question, 2 admission questions, then retirement, little bit, nothing man, there is just leaving the firm, that's it. Okay, and there one examination question recently asked, 10 marks, which is related to retirement. Okay, actually in between 2 questions it came, 8, 9 and all. Then we move into death of a partner. Again some small questions. This is the question you are talking about. June 2023 15 mark question. Death of a partner. Here it looks small. Examination paper it will go into 3 pages. Here it looks small. Okay. Oh, it doesn't look small here also. No, examination paper, if you would have seen, here it looks small. Examination, I think it went into 4th page or something, no? 3 pages. Because they use big font also, that also matters. And dissolution, not yet. I have not put that dissolution into this file. I thought the file will become slow then later on when we are solving. So, dissolution we'll have to solve as soon as we finish death. Only that much. Most. If it is very identical, I will not solve. But otherwise, partnership, I will not look to skip anything. This only is practical question. I have left it for you to practice. 1 or 2 questions which are tricky that we solved in class. Like that, if there are, we'll solve in class. Don't worry. Everything. See what my intermaterial, what I had done was literally it is study material questions and all RTP questions from 2018 and all past examination questions from 2018. And it is fine. It was good for class. But later on, if I have to give one test and all, no, I don't have questions on me. You know what? Literally everything is covered in class. So I had to pick questions from that only and give it again for test. Yeah, but framing becomes a little irritating because framing is fine. Then solving that once will be difficult. Okay, it'll take time, it'll not difficult. See, you can do that. In foundation level, not much. In inter level, what I tell students is to make master questions. What is master question? When you're studying for the first time or when you're revising, you solved one question. In that, there are two adjustments. You went to the next question. There is one new adjustment there. Only one new adjustment. That adjustment you add it to this question only. Okay, question will get modified. Like that, if you keep adding, it will take some time. But you have one master question. So previous day of the exam, what happens is one question you have which revises everything. So you see that question over. Then you don't need to see anything in that chapter. You can go to next chapter. Okay, you can do that. It will take time, but you can do that. It's good. Here you can't do it because partnership, admission is something else, retirement is something else, death is something else. You can't merge all three. You can, but such questions, such in-depth questions, you don't ask. When retirement and admission comes only little, our world shakes. Okay, if at all they tell one partner retired, his son was admitted and his son died. Now you are going to be in trouble. Okay, such things can happen. There are questions where one partner retires and his son is admitted as partner and all. Those questions are there. Okay, we'll see how it goes. What can be asked, that also we will do. A and B start business on 1st January 2019 with capitals of 30,000 and 20,000. Okay, I think no problem there. According to the partnership deed, B is entitled to a salary of 500 per month. See, according to partnership deed. Otherwise, we can't give salary. 500 per month, and interest is to be allowed on capitals at the rate of 6% per annum. The remaining profits are to be distributed among the partners in the ratio 5:3. So, is the profit sharing ratio equal? No, because they have told 5:3. During 2019, the firm earned a profit before charging salary to B and interest on capital amounting to 25,000. During the year, A withdrew 8,000, B withdrew 10,000 for domestic purpose. Give journal entries relating to division of profit. Oh. Journal entry, they didn't ask P&L appropriation. You are ready, no, with P&L appropriation format in your head. They're like, this profit will come here. Then two partners capital account. They have asked you journal entries. Can this be done in the exam also? Can this be done in the exam also? Why not? If it is there in study material, it can be asked in exam only. Exam. You are going fully prepared for goodwill calculation and admission, retirement, death, such questions. Suddenly they tell you profit, interest on capital. It looks easy. You're like, easy P&L appropriation question and pass necessary journal entries. Now you think P&L appropriation only if that is comfortable. Think P&L appropriation in your head and then pass journal entries. P&L appropriation, if at all you would prepare P&L appropriation, first thing what you would enter into P&L appropriation? You would enter the profit. No, that profit is coming from where? Profit and loss account, right? How much is the profit before all this? Can you see before charging salary and all, the profit is 25,000. That profit will come over here. So what will be the entry you are going to pass? From where you are going to remove the profit? P&L account. So your entry will be P&L account debited 25,000 to P&L. For what you're coming now, guys? To show your face before the class ends. P&L account debited to P&L appropriation account. Is this clear? Now, what next? After you got P&L appropriation, then what do you do? What do you do? Interest on capital. Interest on drawings, they have not told. Interest on drawings in this question, it is not there. Interest on capital. Drawings is there. This one, because P&L we got net profit. You write over the note to net profit carried forward usually. So from P&L it is removed. So P&L account debited and it is put into P&L appropriation. So P&L appropriation credited. Understood? Okay. Now after that, what do we do next? Interest on capital is there. Salary is there. How much is the salary for the partners? All partners, are they getting salary? Only B is getting salary. B is entitled to a salary of 500 per month. So what should be the entry? P&L appropriation account debited to Then it becomes a liability now, B's salary. B is capital account. Now, if you are thinking how that journal entry is passed, see over here. We wrote salary to partner, but what is the posting over there? To partners capital account or current account. I just wrote under that what and all can be transferred. Salary to partner, interest on capital, commission, profit share. Are you getting my point? Now, if you are trying to understand why this journal entry, guys, from P&L appropriation, I am removing the profit and I am giving to the partner. Partner, if I have to give, partner's capital account should be credited. If you are taking something from partner's capital account will be debited. Is this clear? So, P&L appropriation account debited to B's capital account. How much is the profit? Sorry, how much is the salary? 500. 500 into 12. This is going to be 6,000. Are we giving something else also to the partners? We are giving interest on capital. Interest on capital at what percentage? 6% per annum. They have told, no, the capital is 30,000 and capital is 20,000. Can you see that 1st January only they started business? Capital is 30,000 and capital is 20,000. So again we have to remove the profit from P&L appropriation account debited to A's capital account. How much? 30,000. 30,000 into 6%. 1,800 to B's capital account. 20,000 into 6%. 1,200. Totally 3,000 is removed from the P&L appropriation. Is this clear? Do we have anything else to give? Profit share. Now whatever remaining profit has to be distributed. Have they given the profit sharing ratio in the question or should we do it equal? Is it given? How much is the profit sharing ratio? 5:3. So now what you will do? How much profit you had first? 25,000. Out of that how much went? 6,000. So you have 19,000. After that how much went again? 3,000. So how much profit is remaining? 16,000. 25,000 minus 6,000 minus 3,000 is 16,000 profit. That will also be given to whom? That will also be given to whom? A and B only. So you will write P&L appropriation account debited 16,000 gone to A's capital account 16,000 into 5/8 10,000 to B's capital account 16,000 into 3/8 6,000. Is this clear? Are you following this? Is there another entry? Is there another entry? Because they asked you to pass all journal entries. Is there another entry? Yes, that is for drawings. Drawings how much? A withdrew 8,000, B withdrew 10,000 for domestic purpose. Domestic purpose means personal purpose. So what should be the entry for these drawings? The first entry is drawings account debited to cash. That is over. That they have already passed. Now this drawings, what should be the entry? A's capital account. A's capital account debited. How much? 8,000. B's capital account debited 10,000 to drawings account 18,000. Are you getting this? Drawings has no involvement in P&L appropriation. If at all there was interest on drawings, then we would pass the entry partner's capital account debited to P&L appropriation. Is this clear? This is your solution. You can take it down. I don't think it should be an issue. Simple question to start with. We'll do one thing. Why to cancel break and all? We will have a different deal. If it's no entertainment also. If it is 10 minutes break, 10 minutes break. If it's 5 minutes break, 5 minutes break. Okay. If other people come late, that much we will extend at the end. Huh? How class can go till 5? That means 3 hours late someone should come. So if it is, if at all somebody comes 10 minutes late for a particular break, the last person coming in, we will add 10 minutes to 10, we will wind up class. So it's like win-win situation. So it will benefit you also and every portion also will get over fast. Nice deal, no? Football rules, I told you, that's like football. This is what happens in football. 90 minutes, but if time gets wasted last, they tell +3, +5. Sometimes it goes to +12 also. No. We'll see what is the next question if we can solve it. Can we go further? Wait. We'll see the next question. I think it is related to this question only. If it is related, we will do that.
The salary and the other interest are given from P&L appropriation.
Yes. Whatever distribution to partner has to come from P&L appropriation. That also from P&L appropriation, but first you will give before giving other things. See, you cannot give interest on loan to partner before paying outsiders. You cannot tell outsider, wait, I cannot pay you rent because I have to give interest to my partner for the loan that I have taken from him. So first outsiders will be paid, then only you will pay everything to insiders. Did you get my point?
But in the P&L appropriation,
We have Ram, Rahim and Karim, it's not related. Oh, I have not mentioned it, but it is there. It is there. Is it clear, guys? That's it for the day. We don't have enough time to solve the next question. Next question is something different. I mean, not different, but not related to this question. Thank you. See you tomorrow. Tomorrow, we'll be continuing with partnership. After this, we'll go into goodwill.